What is up, crypto fans? It's Sam back here with another valuable cryptocurrency video today. We have new cryptocurrency videos coming out every single day, ranging from the latest altcoin news to fundamental and technical analysis. And if you're new here, please consider subscribing as it's free and you can always unsubscribe. And if you find this video helpful to you or valuable to you in any way, please let us know with a like or a comment in the comment section below, as these videos are completely free to make and it really supports me when I see these likes and comments. Thanks so much. Well, as you guys know, this is a little bit of a different video from our normal Theta videos and Theta T-Fuel price predictions, and you may have inferred from the thumbnail and title that this video is in fact going to be all about Dogecoin. Normally we do analysis and fundamental analysis on other coins that have more substance and that are more and that can be used more in real life and that have real life applications. However, Dogecoin is just an absolutely polarizing coin and company, and we just feel like we have to report on this if we want to be a big crypto channel, which we are trying to be. So that is great, and we'll be reporting on this Dogecoin today and why in particular you should not buy it, and why it is so dangerous, and why it potentially could be crypto's most dangerous joke, as this article alludes to. So we'll get into this article, beginning with its key points. Almost no one is using Dogecoin, but the currency still undergoes huge swings. A very small group of large holders have outsized influence over Dogecoin's price. Investors who buy in chasing monster gains may come to regret it. Dogecoin blockchain is a ghost town compared to other cryptocurrencies like Chainlink or Cardano in the market cap top 10, yet the cryptocurrency continues to surge whenever the broader market moves, including a 70% jump in early August, with the small handful of investors exerting market moving power over the entire cryptocurrency. Here's why Dogecoin is a viable long-term investment. Hardly anybody uses Dogecoin. The Dogecoin blockchain recorded just over 23,000 daily transactions on August 9th, according to the latest available data. That mere fraction of 1.2 million transactions recorded on Ethereum and roughly 200,000 recorded on Bitcoin. Even cryptocurrencies with market caps less than 1/3 of Dogecoins regularly recorded more transactions. Bitcoin Cash and Litecoin, despite both being pushed out of the market top 10 in recent times, have recorded 83,000 and 133,000 transactions respectively on August the 8th. So why does Dogecoin's price continue to climb despite such a slim user base? And the answer lies in vastly unequal ownership. Whales control the blockchain. Dogecoin has one of the most lopsided wealth distribution in crypto space, with just one account accounting for 28% of all Dogecoins, and a mere 11 addresses hold 46%, almost half, of all circulating coins, while just 82 addresses accounts for 64% of the total supply. You can see the influence that these few large hands and the movement on wealth across its blockchain. Users transfer more than 5 billion of the coins via Dogecoin on August 8th, compared to just over 8 billion on Ethereum. But as noted earlier, Ethereum achieved this with more than 50 times as many users as Dogecoin, meaning the average Doge user is moving a much higher value coin per transaction. Cryptocurrency was born of a desire to eradicate intermediaries such as bankers and governments and transfer control of one's finances to the individual. But Dogecoin fails to meet the cryptocurrency space oft-quoted goal of decentralization, and its concentration poses serious risks for would-be investors. Its centralized supply effectively creates a small cabal of players with their own bank-making powers and ability to dictate the Doge price at will. Basically, this is saying that The huge whales are basically acting as the new banks and the new intermediaries. A joke currency that is no longer funny. With supporters like Elon Musk, Dogecoin unexpectedly became cryptocurrency's space story of the year. In the process, it gained reputation as a people-powered underdog, as with thousands of individual investors who banded together on social media to pump up GameStop. But the hard data canvassed from Dogecoin's transparent blockchain suggests that exactly the opposite. Dogecoin was created in 2013 as a joke, and by the standards of its own creator, it remains so today. Dogecoin co-creator Billy Marcus sold all of his Doge holdings in 2015 to buy Honda Civic. Fellow co-creator Jackson Palmer has also since demised Dogecoin while characterizing an entire cryptocurrency space as representing the worst parts of today's capitalist system. Dogecoin's heavily concentrated supply presents a clear danger to average investors who may confuse Dogecoin's popularity with legitimacy. Cavalier Dogecoin investors might want to look back at the 2-month period between May and July when the coin price sank 78%, one of the largest drops in the crypto space at the time. While this price followed the direction of the wider market at the time, Dogecoin suffered all the more because of its extravagances in the preceding months, when it pumped to the tune of 12,000%. What goes up must come down, and Dogecoin investors learned that the hard way, that celebrity endorsements, even those with the likes of Elon Musk, do not constitute solid investment fundamentals. Dogecoin had no active development team since its creators abandoned it, and is almost 8 years on from its invention. The coin still isn't used in any application. Like I said earlier, it's got no real-world uses. With no long-term prospects and no real use cases, Dogecoin continues to rise and fall based on actions of few wealthy whales. When those individuals decide it's all time to sell, the average investor is likely to be left nursing heavy losses. From this reason, Dogecoin should be viewed as a very, very risky, speculative vehicle and not a viable long-term investment. And this just goes on to a little bit of advertising for this article, so I won't read that. But now we'll go into my price predictions for this very coin. And I have to say they are not too good. For the short term, I think it will just float around up, down 10% every few days. But for the long term, Dogecoin really has no prospect, and it's got no real world use cases. There's no fundamental market changes apart from Elon Musk that will really cause a change. There's no team building it. So I reckon it will probably just plummet all the way down around 0.01. So yeah, I have to be real with you guys. The predictions are not too good from my part, but these are just speculation and these are just my opinion. So if you guys don't believe it, then I will not be offended, and you can just move on with your day and disregard the opinion. But yeah, that's about it for today, guys. This was a bit of a different video, not about Theta, but about Dogecoin. And I think it's good. I think these price predictions are good for everybody to hear, for new investors in Dogecoin to hear, because there's so much hype around Dogecoin and everyone thinks that this is going to become the new Dogecoin millionaire, but actually it's got no prospect at all. So yeah, thanks so much for the recent support on these videos, guys. It's been absolutely crazy. Make sure to leave a like and comment and subscribe, and if you subscribe, make sure to turn on that notification bell because it really, really supports me. And thanks so much. Goodbye.